prices when you start to hear about some of the statistics of how many multiple offers we're getting on some of these short sales. So we're talking about how much money to invest. The first thing we want to say is, how much money do I have and where is it? So is the money that I want to invest in my pension? Is the money I want to invest cash, or is it in equity? Equity being, for those of you that might have, if there's such a thing, equity in your home. I don't think that's so the pension we're going to talk briefly about, because there is an opportunity there. And if you're talking about considering an IRA, which is what I'm now in the process of doing, I'm moving my money out of the stock market, doing a rollover into a self-directed IRA, and I'm going to walk into the short sale market and buy either 50% down or 100% down in homes. And what's interesting, so many people say, well, I didn't know you could buy real estate with your IRAs. I didn't know, I haven't heard that. Or maybe they just began to hear it. Well, when ERISA came out and said, we can start doing IRAs, I'm not even sure what year that was, but it was in my lifetime, so it's probably about 7 years ago or 10 years ago. I'm not sure when. Does anybody know?
About 10 years.
About 10 years ago? Okay, so about 10 years ago, the Fed said, hey, you guys can start, since Social Security probably won't be around, let's have you start doing IRAs. And there's 45 million IRA holders. What they said was it doesn't have to be in the stock market. It doesn't have to be bonds. It could be in a number of things. But the federal government gave it to the securities market. And they said, securities market, here's the opportunity to get investors to invest in this vehicle called IRA. Here's the opportunity. And by the way, it could be stocks or real estate or deeds of trust. It could be a lot of things. But what happens when you give it to a stockbroker? He's not a real estate agent. He's not going to tell you. She's not going to tell you that to put it in real estate. They're going to put it into what they are selling, which is securities. So this has been an opportunity for 10 years at least, but we're just finally beginning to hear about it. So right now, less than 4% of the IRAs are in non-traditional being something other than the stock market, less than 4%. This is such a hot market right now because finally people are beginning to realize, oh my gosh, we can do that. There's these great companies such as Mountain West Intrust, which is here today to talk a little bit about this. But there's 2 trillion more transactions that they're predicting in the next 2 years entering the market. 2 trillion more. So we're on the opportunity right now at the ground level to get out of some of the stock market, or at least, at the very least, diversify. So when our stock market, when our securities people say to us, let's diversify, let's do a little bond, a little bit of mutual funds, which Kawasaki calls MFers, let's put a little MFers over here, or the stock market, that's not diversification. Diversification is really taking your money out of the stock market and diversifying it, keep some in the market, but diversify other things as well. So some people are buying gold and silver and that sort of thing. At least it's intrinsic. At least you can touch and feel it. But to be able to touch and feel real estate, or especially be able to drive by and see it and know that thing's going to give you some cash flow. When you look at what's happened in the stock market, where we dropped 200 points in like one day. I mean, even though maybe over the long run, over the short run, you might see drops in real estate, but you're never going to see 200 basis points drop in a piece of real estate in one day. So again, real estate is a marathon, it's not a sprint. So it's a long-term looking at your opportunities. So obviously there's different types of funds. You've got the Roth IRA and the traditional IRA, and you can also invest your KEO, your SEP program, your 401k. That's a little bit, a little more tricky. You have to talk to your employers about the 401k and see if there's a portion that you can roll over into a rollover IRA opportunity. So you just have to check with your benefit plan of your employer if that's what you actually have. But we're going to talk a little bit more about that. There's disqualified parties involving the IRAs as well. So, if you can't buy from your family members or your spouse, your lineal descendants, which is your children and grandchildren, fiduciary, I can spell that one wrong. Okay, Rush. Okay. So again, how much do you have to invest? So depending on what you're going to be investing in, how much do you have to invest? Typically, in non-owner occupied, you're looking, and lenders are going to speak. In fact, Linda's here. She's going to speak a little bit about what Sterling Bank is offering. But financing is somewhere in the 25 to 30% down for non-owner occupied. If you were to invest through your IRAs, it's typically anywhere from 30 to 50%. The important piece about the IRA is that it has to be,
Non-recourse.
Non-recourse, thanks. Yes, non-recourse, which means you can't personally guarantee. So lenders are going to ask you to put more money down, so you're not personally guaranteeing that loan, but they are available with a good percentage down. So types of properties, you're going to decide, once you decide what kind of money you want to invest, you can go into apartments or duplexes, triplexes, single families, and fourplexes. We're going to talk a little bit about some of the opportunities in this marketplace between here and Caldwell as well. So